Hello, good morning, and welcome into another episode of Good Morning NASDAQ, your one-stop shop to get all the information on the gappers every single morning, 8:45 a.m. right here on the Clover Trading YouTube channel. We hope you guys had a fantastic weekend and are ready to put in some work. For this? It's the 11th day of December now, so mid-December, moving towards Christmas very close, very quickly. But it's a beautiful day, a beautiful week, and we're ready to get after it. And I hope you guys are too. This would be a perfect time to hit that thumbs up button. Make sure you are subscribed to the channel as we are on that journey towards 4,000 subscribers. So if you are not and you appreciate the channel and appreciate the free content, we post videos every single week. We're live 5 days a week. As long as the market's open, we are here. Please consider subscribing to the channel. Keeping that notification bell turned on so that way you never miss a show. Alrighty. I'm gonna let you guys funnel in, hit that like button. Don't be afraid to chat where you are from, what you're watching today, how you've been trading, whatever you want to type about. Get it going in the chat. Looks like a pretty slow morning for gappers. So if you do have questions, if you do have tickers you want us to talk about, this would be the day to do it, because we might run through the gappers quite quickly. Let's welcome in Huddy.
Hey there, how's it going, everyone? How we all doing on this fine Monday morning?
Where are you at? Ecuador?
We're in Miami. We're in Miami for another 10 days.
Okay. It's crazy
And
that you just know like how long you're going to be in that location for, and then you're
well, isn't
moving
that true with
on.
everyone?
No.
Yeah, we got
I don't
Miami for
know the
10
next
days.
time I'll leave here.
Oh, I
I'd
don't know
have
the
to
next
look
time
at a
I'll be back.
calendar.
I don't know the next time I'll be back in Miami.
Oh, really?
Yeah, it gets scary after December 20th.
Why?
Again, just a lot of travel. We got Thailand, Mexico, LA on the docket.
What's wrong with you?
I have a problem staying still.
You do. You should try it for like 6 months. You'd probably become more zen.
Yeah, I feel like 2020 and 2021 gave me all the at-home zen I needed.
Yeah, right. All you did was work.
I also traveled.
All right, all right, all right. We got Raymond in the chat, Simon, Selene Music, Joseph, Daria. Welcome in, everyone. Make sure you hit that thumbs up button. We're just a little bit below protocol right now, so make sure that by the next time I check, that number is within 50% of concurrent viewers. Let's get into it. The biggest gapper on the day is KTTA. Let's take a look at dilution tracker. That's what I use to kind of get a quick snapshot of everything going on with the fundamentals. Of course, if I want to, I can dive more into the filings, get more information if need be. But right here, I can just see a snapshot of float. It's a biotech. It's called Pasithea. Pasithea Therapeutics. News today. They announced positive in vivo preclinical efficacy data for PAS 004 from NRAS mutation cancer xenograft models. Translation, Huddy?
Um,
We don't know.
we don't know.
The development of innovative treatments for central nervous system disorders. Positive preclinical results. So that's not even like phase 1.
Not even phase 1.
So for biotechs, they generally go through phase 1, phase 2, phase 3 before they can go for FDA, right?
Well, there's preclinical before phase 1.
Yeah, that's where we are here.
Yeah.
But generally, the news that works the best is like we're actually close to going to market.
Phase 3 is generally pretty good news, but again, like it comes with so many nuances, like phase 3, what does it actually take for a company to bring a stock to market? It takes a lot of money. That's like where you can always start. And so even if you have like phase 3, if you don't have the money to bring your product to the market, what are you going to do?
Dilute.
Exactly.
That's what I would do.
But sometimes, right, that dilution doesn't have to be toxic to the shareholder community. Sometimes you'll get a good run up on phase 3, and then the offering will come in at like very healthy prices where like the insiders are not getting a discount to what the new price of post news stock price is. And in that case, like the offering could be very healthy. It could be like, oh, someone saw the phase three news, thinks that there's a 5, 10 year trajectory of this company, and they want to get in today and lock in their prices and help the company see that vision through. Like that can be a healthy offering. It's just most of the time in small cap, that's not what you get.
Rarely.
Rarely.
So we know that news. There's a 10.9 million float. They have 16 months of cash based on a quarterly burn of 3.17 million. Got some warrants at 350, 625, a million at $1.88. And once you right now, we're gonna get to the chart. Those levels aren't really all that important because we are at 82 cents. Started at 30 cents, got as high as 95 cents. Big mover already in the 170% area. If I'm just going to draw a line here, what I like to do when we are gapping past previous resistance is just get an idea of where that line is, because it might end up being support on a day like today when the stock's doing bigger volume. Going back, looking for volume days where the stock has topped out, looking at areas that where it might run into that might be difficult for the stock to just bust on through based off of how much supply is there. 150 area is the next notable one before all the way up in the low twos. Not a great history here of holding anything. You got a lot of wicks to the upside. Big gap up day back in 21 before fading off for multiple weeks. Let's see the... So it looks like that news came out at 8 a.m. and we've had just steady higher lows and grinding up. What does Huddy think about the daily chart?
About the daily chart? Just from a volume profile, okay, we're over that 60 cent level. That helps me some degree. I would say that we've gone over a previous level that was key, although that volume was pretty much nothing. Going back 4 years, I see some overhead resistance from back in 2021, gapped up, failed pretty hard, then tried again in the twos and still failed pretty hard. So some overhead resistance to definitely be kind of aware of as 80 cents and $2. I mean, pretty much anyone that got bagged from 2021 hasn't seen the light of day. So definitely a bag holder chart. And I would think that, anyone that's, I don't know if they're even watching their position at this point, but anyone sees that, their $2 stock is coming off a 30 cent low and is at 80, I'd imagine they want to sell. Especially if you're in at 8, that'd be even worse.
It's just kind of the nature of the small caps, but top left to bottom right charts. Your top left, the highs up here, the lows are where we are right now. That's just the psychological side of it that Huddy's talking about. We look at these big volume days because those are days where people bought a lot of shares. Look at the volume. The volume's right here on my chart. On just random days, you're looking at 200, 400, 70, 60, 120,000. Really not all that much. The stock wasn't doing much of interest, just kind of going sideways or fading across multiple weeks and months. So on the days where there's lots of volume and people did get bagged, those are the days to be of note because those are their break-even levels. This first area at 60 cents, we're already above that right now, but we're churning a lot of volume. So if there's the potential that we work all those sellers out. But as stock continues higher, already up 170 on the day, 170%. Other levels of supply should matter because, like Huddy said, think about yourself. Put yourself in bag holder's shoes and ask yourself what you'd be looking for to get out. The last reasonable spike you got in over a year was in, what is 7? Is that August?
Yeah,
July.
July.
July. And if it didn't really spike all that much, then we faded even more till recently. So now that you are 20, 30 cents above those levels, you really got to be thinking, and I know some of you've probably bag held in the past before, and you've been in situations like this where you're just like praying for the day that you get to relinquish that position. Sometimes it matters, sometimes it doesn't, but that's kind of why resistance and support matter, and I think it's an important thing to take into account. Anything in the filings that make you go, whoa?
Nothing crazy. I mean, it all just looks like ordinary business. The one thing that's like, ugh, which it's literally that, is that they have this tender offer, which they've been, working on since August 9th. And I don't know anything about tender offers.
Where do you see that?
And in their filings, they just have one, two, three, four, five, maybe six recent filings related to this tender offer. So I don't really know what's going on there. That's more fundamental than I like to be. I really just care about share structure, and I don't see anything that would affect share structure too much right off my 15 minutes of research.
Okay. Okay.
Announces intention to commence a 4 million tender offer for its common stock at a price of 70 cents per share.
You have to really keep that offer tender if you want it to work.
Something like that.
If you keep it too aggressive, probably not going to get through. So I kind of like the strategy here, going with the tender offer.
Yeah, so yeah,
You
I
don't
think
even know what to do
KTTA
with
will just
that.
kind of come and gone.
Okay. Well, that is KTTA. No real initial plans for me on it. I'll be focusing more on daily chart patterns. So this one I will be rooting for it to do whatever it wants, go as far as possible, maybe test a dollar, see what it can do. Mondays are a great time to get a good feel for what the market's going to be like that week. You can kind of think of, especially in the markets we've been in where we haven't had multi-month long runs where the market just is very consistent in terms of its speed, its gappers, its runners, its momentum over the course of many weeks and months. When you kind of have this back and forth market, which we've had for most of 2023, if not most of 2022 as well, Monday kind of sets the stage. We saw it last week where, do we have any giant gappers Monday, or did it kind of start? No, Monday kind of reset it after we had VVOS, MINM, all those stocks, NEXI the previous week before that. And then Monday and Tuesday last week, things slowed down again, and it kind of set the tone for a slower week. And so we'll see what this week brings. So what these gappers do will give us a little bit of insight. I know for a fact that my watch list is very barren right now. So I definitely am sitting on my hands on, today and tomorrow, waiting for stuff to develop, waiting to get a read on the market and to see where we are going. Let me see what the overall market, yesterday I checked, it was, if I could type, sitting right near the highs still. So yeah, we'll see what today kind of offers. I'm not really willing to just go after things and click buttons. I'd rather sit back and wait. Maybe KTTA is one of those mid-range sub-dollar stocks that goes, and we can use this similar type of news, this similar type of float, price, whatever it is, as something to build off of in the coming days. Let's see what else. I saw one more, and it's under 60% now. I don't really. So all the gappers today, all the top gappers, are in this price range. As you can see here, everything pretty much over 30%. NXTP 55 cents, Lucy 65 cents, IONM 52 cents, and then KTTA, your leading gapper this morning at 80 cents. So it definitely feels like this morning all the movers are sub dollar. It's probably not going to interest the majority of short sellers. I'm sure KTTA, any big spike through $1 would interest a lot of them, worth taking a try since there's nothing else mid-range. Again, that $1 to $5 area to short. So we'll see how that morning kind of plays out. What are your initial thoughts here, Huddy? I'm going to look for some questions.
I don't know. My initial thoughts are like go back to October with KTTA, which is like most of the stocks that gapped up huge from 30 cents kind of failed. And that's honestly the only stock I see that's moving today.
Yeah. And that's kind of the mindset I've been taking with it. Even when we've seen some run, I think we had TENX. Like there was another one a couple weeks ago that had a really nice move and then tried to have a day two. But it's really hard to bet on a stock these cheap in the market that we've had over the last year, where it's not just everything that gaps goes. We kind of started to see that towards the end of last week, where everything had a morning spike, at least 30, 40, 50% moves. We'll see if that continues. But this being the best one, I'm pretty much just rooting for it to go as high as possible. Become an actual daily chart setup down the road. Maybe go to $1.20, $1.30 today, gap up, go to $2 tomorrow, and then we got something to work with. We got to have runners before we have daily chart plays. So rooting for some runners. Throne says Huddy should put out a video on how to properly travel as a day trader.
Not a bad idea.
Not a bad idea. Huddy, can you explain what are the important infos you look for in the filings?
The main thing I'm looking for is, what's the cash relative to what's the cash burn rate relative to the cash? Like, how badly do they need cash? It's not just about having 1 million or 5 million or 10 million, but that number is arbitrary. The amount of cash you have, it's really how fast are you going through it and what's the need of an influx of cash? Like, how quickly do you need that? That's super important to me. The other thing I'm looking at is share structure. Is there any, form of outside, selling pressure that I can pinpoint in the filing? So I'm looking for warrants, ATMs, convertible preferred
What
shares.
filings are those? Would those generally be in 424s?
424B5s. I'm looking through, proxy statement, reverse split statements, just, anything that's recent about the company to find things about specifically the warrants, the ATMs, the dilution, the cash situation. Why are we running in the first place? I care about that. Has this news been presented before? All that stuff I find in the filings.
Okay. Is there any of them? Was ALLR a good example of one where you could kind of get an idea of that cash position and why they, and with the dilution that they had, they were able to use it was a there was a decent edge there just knowing that they needed the cash now and they had the means to do it. If you want to go through
Yeah,
that one.
so ALLR was a situation. If I'm just pulling up dilution tracker because I don't remember it like it was yesterday. It was like 2 weeks ago or maybe a week ago. But yeah, they, just going off dilution tracker, which I generally go through the filings to find this information, but I'm sure dilution tracker is the next best thing. Company has negative 1.3 months of cash left based on a quarterly cash burn of negative 3.69 million and a current estimate cash of minus 1.6 million. So like all of those numbers are negative. Um, that's not healthy cash. And then you're looking at, just the warrants that they have outstanding. And I think what we saw was there was like 7.5 million priced right at a buck, and the stock was gapping up to a buck. And I think the news felt either regurgitated or like either it was the same news twice or it was just a weak PR. So this is a situation where, just by reading the filings, I came to the conclusion that this was more of an attempt to execute the warrants and put cash into the company's pockets rather than, actually run the stock and get it to higher prices to do other things. There's a number of things that companies can do if they're strapped for cash. It's not like, oh, warrants and they're going to automatically execute. They could be trying to unlock, like, for instance, baby shelf restriction, which allows them to dilute more than what they would be able to if they were under baby shelf restriction. So sometimes that is the end goal, is to unlock that capability by spiking the stock as high as possible, and then do the offerings. So, but for the most part, you're going to be able to find like a good fundamental picture of what the stock actually is and what their agenda may be past what the press release is saying. And that's where I find the filings really help.
Yeah, I think that's a good way of kind of explaining why you can't just look into the fundamentals or the filings or dilution tracker or the dilution and make a blank statement. They're going to dilute today. They're going to use their ATM. They're going to cash out these warrants because every company has different motives and different reasons for why they do what they do and when they want the money and how they're going to get it. And which is why you see so many fundamental traders get blown over to the short side in the short term, which sometimes can last longer if the stocks go up, hundreds, thousands of percents, and they're way past their positions. Fundamentals are a great place to start. Price action is, they always say price action is king, and that's the truth because at the end of the day, the fundamentals, we've seen many runners with toxic dilution that still go on 3, 4, 5 day runs before any of that dilution's cashed, or sometimes the dilution doesn't even matter based off the volume that the stocks are trading. You have to find a way to marry the fundamentals with the technicals, and that's why we try to go through both and explain to you how one impacts the other. And if there ever is a situation where one we think has the upper hand, whether that be the technicals and the price action, the volume, support and resistance, or it be the fundamentals and the dilution, the float, the news, whatever it is.
I'm pretty much looking for like a reason for there to be an overwhelming amount of supply. And then hopefully there's like some demand into that level so that we can bag a bunch of people.
Bag them up, bag them up.
That's important, guys. Like the also like I always say share structure, right? Float, market cap, shares outstanding, dilution. Like that stuff matters really big when you're talking about small caps, which predominantly are running on supply and demand. I mean, most of these companies are fundamental nightmares. Most of these companies are duds. Most of these companies are only running based off of hype. And hype is an emotionally charged moment in the market. So it's pure, it's the pure basis of supply and demand in that moment because we're not running off of anything fundamental. There's not a lot of big players accumulating and stuff like that. So it's a lot of dumb money versus dumb money. And so the side that wins is the side that has the overwhelming amount of money. And sometimes like you're going to be able to see in the filings, like, okay, what's the capability of this stock? Like how far can it push? And then if it does push this far, like what happens at certain levels? And that's kind of the key to the puzzle.
The keys to the castle are the keys to the puzzle. Write that down, right? You'll find the keys to the castle in the puzzle. Right, Huddy?
Yes, right.
Okay, cool. Lauren says, thank you, Dom, for your overview and insights. As Huddy adds insight specific, I found both your calm demeanor to be super helpful as I get back into the market after a long personal layoff. I don't know if I would describe us as calm, but I like that. That's kind of nice. It makes me feel mature and older, which we are, the older Clovers.
We are.
The Olvers.
It's really easy to be calm when you have such a like thought out business plan as to what you want to trade and what you don't want to trade. It's not like there was definitely a time where, you'd wake up in the morning and anything
Oh,
that was gapping up or moving was super interesting and like demanded your attention. And, I would go through the whole like 2 hours of pre-market, digging through everything and reading everything. And eventually you are able to narrow that process into such a more focused dynamic where it's not hectic. It's like there's only really one or two or four stocks a week that we really have to look at. Um, so it's like days like today, super calm because there's literally nothing that I even want to trade. Um, but we're still here checking the gappers and making sure that there's nothing I want to trade, which there isn't.
I think that's like the maturity level that you go through as you kind of evolve from complete beginner to like newbie to like I can kind of make good trades, but I don't know how to like put the math together to make money yet. Like you eventually learn that the goal of this game is to find what not to trade versus necessarily what to trade, because those ones kind of come at you and they kind of like flash their arms and are like, hey, I'm the best one, and that. It's really about getting yourself to say no to a lot of suboptimal opportunities. It took me too long to understand that not every gapper or any gapper at all fits my personality in the way I should be trading. And it took me a long time to go, okay, maybe I need to take a break on the short side and focus on this one pattern right now, because that's the way I'm going to go from being an experienced loser to making money. And it's little by little you learn that narrowing your focus, and you have to put in a lot of time to do that. I remember at the beginning, definitely wasn't calm. It was everything Huddy is talking about, and at 9:30 just blacking out and not clicking any buttons and going, what just happened for the last 30 minutes? There was just too much action, too many trades everywhere. But it became a lot easier when I showed up to the market and said, I'm only allowed to trade if it's on my watch list and I'm prepared for it. And then all of a sudden, the pre-market action didn't matter. If my trades gapped down and I needed to gap up, then I wasn't trading them. And then all of a sudden, there was just one opportunity every single day, maybe two or three, where I was like, okay, I got to click buttons. I got to put my money on the line. I got to have some risk on the table. And that's when you start to really succeed or find consistency before you succeed. It's just having a plan and executing day after day after day and letting those results show you that that's the right path.
I'll also say, like, I think there's also, I mean, if you're the person that's trying to, look at a group of gappers, discern which one can potentially spike the most and then buy that one in the first 15 minutes, like, it's going to be very hard for you to be calm in this environment. I find it's very hard to choose and try to predict which one is going to be the big spiker of the day. So if you're in that phase still, that's maybe something you need to rework because that is a very stressful job. You have 4 or 5 absolute crummy stocks to choose from. And that's why you'll see so many of the successful traders that are in small cap become short sellers, because there's so much more objective information when it comes to shorting extension. And it's still tough. It's not easy, but trying to pick in a basket of absolute crummy stocks, which one's going to spike in the morning based off one day of information is a very daunting task. And I think the sooner you get away from that, I'm not saying don't buy stocks. I'm just saying as soon as you get away from the whole crowd mentality of trying to predict the next spiker, I think the sooner you can find, calmness within the storm.
Because it's not always directly correlated to anything. Like with ALLR, you can almost clearly say that based off of the information we just went through, and if you want to look at a daily chart of what ALLR did, as a short seller with that type of bias, we topped out at 110 or 111 and went red on that day. Gave everything up on massive volume. It's not crazy to go, they left it over $1 for 10 minutes so they could add $1 with those warrants. And then there was no one, everyone was bagged to the long side and it faded off all day and they continued to sell, or it just couldn't catch its footing and the momentum was gone. But, even when a crappy stock goes up and, any number of ones last week that ran, what were the last few? Last few on Thursday and Friday. Why am I blanking, Huddy?
Stocks that gapped up at $1.
No, stocks that gapped up and ran last week.
I don't know. There was that Nexi, right?
MLGO was one, which was a complete turd. We talked about it, how bad it was. Still goes on a run from 4 to 10, ends up in the 20 at $20 in after hours and pre-market. Like he's saying, picking a basket out of these turds is difficult because there's no direct thing that you can take to the next trade and go, this is why this one worked. A lot of the time, it's the price action, not the news. And that's why you see a lot of long bias traders who trade gappers and small, like low floats first thing in the morning in the pre-market and they open, are rarely diving into the fundamentals because they know that they're looking for short, quick moves. And if they don't get it, if the price action doesn't agree, if shorts aren't getting squeezed, it's probably going to go lower. Last question. I don't see any about tickers. So everyone's kind of on the same page this morning in terms of it being slow. That means we take breaths, we relax. Just because we had a nice weekend and we want to get back in the game and make some money this week doesn't mean today is that day. I have a note on one of my screens downstairs that says, there will be one opportunity this week that can make my week. And, is today that day? Is there a trade today that's going to be that trade? I don't think there is today for me. It is said that only 5% of traders succeed. What directly contributed to you beating those odds? For me, it was a simple quote that I heard. I think LX21 said it. It was like, if you do what the 95% are doing, you have a 100% chance of failure. And if you do what the 5% are doing, you have a 100% chance of success. And it was being in the right communities, following the right mentors, networking with the right students, reaching out to Jack Kellogg back in the day, expanding my knowledge, expanding my understanding of the market. But it really comes down to, and I've been working on this the last few weeks, and recently with Kellogg, just how much work it takes. It's not about the trades. It's not about the setup. It is about, becoming so consistent in your process and not letting that degenerate gambler nature that I think almost all stocks traders have to some degree, whether it's your fix and you don't do anything else in life, a little bit dangerous, and so you got to bring that into the market, whether you just enjoy putting risk on the line. You have to be able to be consistent, kind of what we were talking about. You have to avoid so many traps and so many wastes of money until that math equation works out. And that takes a lot of, doesn't necessarily have to take a lot of time, but it has to take a lot of you sticking with the experiments that make sense. If you tell yourself, I'm not going to take these trades anymore for a month. I'm only going to trade multi-day breakouts. I'm only going to short sell first red days. Whatever it is, if the more you can handcuff yourself at the beginning and stick to a level of discipline and patience for that setup, it's very hard to fail when you are literally cutting out so many things. It's elimination diet, if you will. But for me, that's what it was just becoming a master at one thing, letting everything else sit around the sides, even studying those things, even if I'm not trading them, running them in paper accounts or simulation, but becoming so consistent in my process that they became habits. And then all of a sudden my risk management is on point. My stock selection is on point. My ability to execute on those plays is on point. And all of a sudden the money started to work. Any extras you want to add, Huddy, before we wrap her up?
Yeah, for me, I think the biggest part that kind of put me over to the other side was checking my ego at the door and realizing that I know how to trade maybe 0.5% of the stocks out there in the market, and the rest of the stocks, I really don't have an edge, or I have no idea what I'm doing. And I think it takes a while for you to be able, for any trader to be able to separate, the idea of, can I make money? Does the stock have a 50% chance of going up or down? Can I make money? Or should I make money? Do I really have an edge? Is this really something that I can repeat? So that was like the first aha moment where I was just like, wow, like no matter how hard I try to be like someone else or like want to trade the same setup as someone else, like most of the stuff I cannot trade. And that is most likely still probably vastly true for today. Like that margin is still probably very tight. That was number one. And then that led me to believe that, okay, there's one setup that I do very well on. Like that's the setup I have to learn. That's the setup I have to trade. So it took, 2 years of not buying any breakouts, not buying any first green days, not buying any trend breaks, not buying any, anything. I literally did one setup, which had very strict criteria to it. Woke up every day. If it wasn't there, I wouldn't trade. I'd go to college. I'd do whatever. And that's how I found that. That's like what led me to being a disciplined trader, to say, hey, like, it doesn't matter how much money someone makes over here or over there. It doesn't matter if I think I can make money doing what that person does. Like the fact is I can't. The fact is I won't. The fact is that the only way I'm going to make money is on one setup and one setup only. And like eventually that one setup, once you have maybe like 6 figures under your belt, branches off into 2.5. Maybe it's within the same confines of the setup, but it's a different angle. Maybe it's a parabolic instead of a breakdown. There's different subcategories of every single setup. And that's what I mean. Like there's so much to understand about one setup that it really, the key to becoming better than the rest is to master one setup and one setup only. And hopefully that setup has enough frequency and, return relative to the risk that allows you to be profitable and sustain your expenses and do this for another year. And that's the best place to work from. And I think that's true with any single, profitable trader. So check your ego at the door and focus on one setup. And I think most people can find success. But again, it really depends on one setup you choose to focus on.
Yeah. Very well said from a very well spoken man, Mr. Michael Hudson.
Well, full name.
All right, everyone. It is time to head on over to the Clover room. If you want to be a part of it, Monday is a great day to do the 7-day, $7 trial. Link in the description, clovertrading.io, Clover Academy. Use code FREE if you want some free education there, hours and hours of education. But 7-day, $7 trial will get you access to everything that we offer: webinars, video lessons, Huddy and Dom archived webinars and boot camps, chat room, trade alerts, watch list, everything for 1 week, and then you'll probably make the decision to stay. So I know that's why you probably haven't done it yet, because you are afraid to commit because you know you're going to want to stay. But Monday's a great day to do it. We haven't done any live webinars yet this week. We'll have at least 2. But yeah, link in the description. Get after it. If not, if you're not quite ready to make that jump, we will see you tomorrow morning, 8:45 a.m. right here on the Clover Trading YouTube channel. We appreciate you. We appreciate your likes. We appreciate your subscription, your subscriberness. And we love doing it. So we will see you tomorrow morning. For all you Clovers, we'll see you in the room in like 3 seconds. So 3, 2, 1. I hope you all have a fantastic day and have a great start to your week.